One must have the courage to view reality as it truly is, not as one would like it to be. And right now, for most people, the reality in the crypto space looks damn sobering. While the tech sector is throwing a party reminiscent of the dot-com era, while Nvidia races from one record high to the next, while AI startup valuations reach astronomical heights, and while giants like SpaceX conquer the cosmos, crypto feels like the forgotten guest at the party, standing all alone in the corner. The market is stagnating, it is correcting, it is boring. For anyone who entered this market 12 or 18 months ago expecting to find quick, exponential wealth, the past few months have served as a brutal lesson in opportunity costs. Capital is working everywhere else, just not here, it seems. And the logical consequence is clear. The masses are capitulating. The casual investors, the crypto tourists, the fortune hunters, they have long since moved on. They have liquidated their positions and poured their capital into the next shiny object, artificial intelligence. You can't even blame them. Anyone seeking returns in an agnostic fashion, that is, without any ideological attachment, simply chasing the curve of maximum profit, will find absolutely no fertile ground in the crypto sector today. But this brings us to a fundamental question, a question that anyone still here today, anyone still running nodes, still writing smart contracts, still guarding their private keys like the apple of their eye, must ask themselves, why are we actually still here? If crypto is supposedly the future of money and technology, why does it currently feel as though that future is being built somewhere else entirely? The answer to this does not lie in the charts. It lies in a historical phenomenon that I call the blind spot of euphoria. To understand what is happening on a technological level, we must first grasp the mechanics of money. The market faces a historic challenge. In the coming months and years, what are arguably the three biggest investment stories of our generation are preparing to enter the public markets. We are speaking of SpaceX, the spearhead of interplanetary infrastructure, and we are speaking of OpenAI and Anthropic, the two architects of artificial intelligence. Estimates suggest that, in the medium term, these three giants combined will siphon well over $300 billion in fresh capital from the global market. $300 billion, that is not an abstract figure. It represents purchasing power capital that must come from somewhere. It is equivalent to millions of bitcoins. It corresponds to the entire market capitalization of large segments of the crypto ecosystem. When institutional investors, family offices, and private investors alike are faced with the choice of parking their money in a stagnant, decentralized network or investing in companies that seem to push the boundaries of human intellect on a weekly basis, the choice for the masses is an easy one. Capital flows out. It is a physical law of markets. Liquidity always seeks the path of least resistance toward maximum attention. Thus, we are not witnessing a structural collapse of crypto. We are witnessing a gigantic global reallocation of liquidity. The world is distracted. It is intoxicated by the euphoria of a technological singularity, one that, thanks to LLMs and generative AI, now seems within tangible reach. And this is precisely where the misconception begins. The assumption that the success of artificial intelligence spells the obsolescence of crypto is the greatest intellectual fallacy of our time. For in truth, the exact opposite is the case. This euphoria blinds people to a simple fact. AI solves none of the problems for which crypto was created in the first place. What is more, it will dramatically exacerbate these very problems. If we look back through history, we see that humanity tends to think in cycles of euphoria. When a new, disruptive technology appears on the horizon, the collective reacts like a hyperactive child. Everyone wants to get in on the action, come what may. Corporate valuations detach themselves from reality, and fundamental metrics are declared obsolete. This was the case in 2000, when any company with a .com in its name was worth billions, even if it merely sold pet food online. It was the case in the 19th century during the railway boom, when tracks were laid across uninhabited deserts simply because the narrative felt right. What all these eras have in common is this: the technology was real, the internet changed the world, the railways changed the world, artificial intelligence will change the world. Yet the euphoria surrounding the technology blinds investors to the systemic risks that continue to swell in the background. Let us ask ourselves rationally, is a share in OpenAI the answer to the fact that the global financial system sits atop astronomical, unpayable mountains of debt? Is an investment in SpaceX the answer to the fact that central banks worldwide are eroding the purchasing power of their citizens' stored lifetime? Their savings through constant dilution? Does a better language model solve the problem that personal sovereignty and financial privacy are being systematically dismantled in the digital age? No. Quite the opposite. Artificial intelligence, fascinating as it may be, is, in its current form, a tool of extreme centralization. It requires gigantic data centers and multi-billion-dollar investments in hardware that can only be controlled by a handful of tech monopolists. Furthermore, it is inherently susceptible to censorship. It is a top-down system, a system of control. In times of euphoria, no one seeks sovereignty. When prices are rising and everything seems effortless, no one cares about the foundation. When the house is brightly lit and the music is playing loud, no one asks about the stability of the foundation or the condition of the pipes in the basement. Yet, the condition of the foundation of our global system is deteriorating day by day. Debt does not vanish thanks to AI. Rather, it increases to finance the very infrastructure required for it. The dilution remains. Let us take a step further and shift our focus away from a purely monetary perspective. Let us consider the technological reality toward which we are heading. We are hurtling at breakneck speed into a world dominated by artificial intelligence, a world where content creation carries zero marginal cost, where armies of bots are capable of completely manipulating discourse on social networks within seconds, a world where deepfakes are so flawless that the human eye and ear can no longer distinguish between reality and digital fabrication. If everything can be copied, faked, and synthesized, what then becomes humanity's most valuable commodity? The answer is uncorruptible truth. Cryptographic verifiability, scarcity. When the internet is flooded with AI-generated noise, how will you prove your digital identity without surrendering your entire privacy to a state or corporate entity? The answer lies in zero-knowledge infrastructures and decentralized identifiers (DIDs), technologies pioneered within the crypto space. When autonomous AI agents begin to engage in economic interactions with one another in the near future, API against API, code against code, do you seriously believe these agents will open a bank account at Commerzbank? Do you imagine an autonomous software program waiting 3 days for a SEPA transfer or accepting the credit card fees charged by Visa? Autonomous machines require autonomous programmable money. They require a native settlement layer for the internet. They require micropayments that can be processed in milliseconds without permission from a bank and without the risk of account suspension. They require networks like Bitcoin Cash or DeFi protocols that operate deterministically and are incorruptible. And what about the computing power itself? If all the world's intelligence resides on the servers of 3 or 4 major American corporations, then we have created an absolute digital dystopia. A single click, a single change to the terms of service, and entire industries could be shut down. Feedback geben. Verwende die Pfeile, die vollständige Übersetzung anzusehen. This brings us back to the fundamental reason why we are here, why those who truly understand this space do not flee when prices fall or stagnate. It comes down to the concept of stored lifetime. Every day you work, every day you sacrifice your energy, your creativity, your intellect, and your time is a day you can never reclaim. Time is the only absolutely finite resource that an individual possesses. When you receive money in exchange for that time, that money is nothing more than the materialized form of your lifetime. You are storing your vital energy within this medium so that, in the future, you may exchange it for the lifetime and labor of others. If the medium in which you store this lifetime, be it the euro, the dollar, or a bank balance, is structurally designed to lose value, if the system relies on constantly diluting this medium in order to service its own debts, then this is not merely a technical matter of economics. It is the systematic theft of your lifetime. A system that devalues your savings forces you to run ever faster within the hamster wheel of inflation, simply to hold your ground. It compels you to take risks in the stock markets, risks you might otherwise wish to avoid, solely for the sake of beating inflation. It renders the individual dependent on third parties, on fund managers, on central bankers, and on political decisions. Crypto, and specifically the concept of self-custody, or sovereign ownership, represents a radical break with this cycle. For the first time in the history of civilization, humanity possesses a tool that enables individuals to hold property directly, secured by mathematics and without the permission of any intermediary within the digital realm. When you hold your keys, no third party holds your lifetime. No bank can freeze your assets simply because your political views do not align with theirs. No government can double the total supply of this asset by decree in order to plug a budgetary hole. This is what drives the people who are still here today. We are not driven by the question of whether the chart will be 5% higher or lower tomorrow. We are driven by the realization that the existing global financial system is mathematically heading toward a terminal stage, one in which dilution is the only remaining escape route. And when that moment arrives, no one will spare a glance for the valuation of an AI startup. In that moment, the world will be searching for a safe haven for its stored lifetime. Euphoria is like the tide. When it comes in, it lifts all boats. It floods the market with cheap money. It creates the sensation that everything is effortless, that trees grow to the sky, and that the old laws of economics no longer apply. In the intoxication of the rising tide, everyone becomes a genius and no one questions the inherent risks. But the law of nature and the law of markets dictates. Every high tide is followed by an ebb, always, without exception. When the euphoric intoxication of artificial intelligence subsides and subside at will, as soon as expectations collide with the hard reality of earnings reports, regulatory hurdles, and market saturation, the waters will recede. And when the waters recede, only that which possesses a genuine foundation will remain upon the shore, that which does not depend on perpetual attention, hype, and cheap liquidity for its very existence. The world's problems will not vanish simply because we possess better technology. Sovereign debt will not disappear thanks to AI models. The erosion of personal liberty, brought about by central bank digital currencies, CBDCs, and ever-tightening financial controls, will not be swept away by rocket launches into space. The need for digital sovereignty, for censorship-resistant money, for an incorruptible layer of truth, this need grows with every passing day as the world becomes more digital, more centralized, and more unstable. That is why we are still here. We are not here because we are seeking the most attractive investment of the moment. We are not here to chase short-term fiat money, only to park it once again in a system that is rotten at its core. We are here because we understand the technology that provides the fundamental answer to questions as old as human civilization itself. Who owns my property? Who controls my money? And how do I protect my freedom from the reach of authority? Do not let yourself be distracted by the noise of the market. Do not let yourself be swayed by temporary stagnation. Demotivate you. The strongest foundations are built in the shadows, when no one is watching. In time, the world will rediscover the necessity of decentralized systems with a brutality that most people today cannot even begin to imagine. And when that day comes, then, looking back, it will all have seemed completely obvious. Stay focused. Stay sovereign. See you in the next video.